All we have are these corrupt governments buying each other's bonds with funny money that they conjure out of thin air. It is the world's largest Ponzi scheme in history. It's the financial model of all of our governments. So how do you have a deflationary crash? How do they even crash the markets and then come out the other side again? And this is why I'm deeply afraid that we're not going to be witnessing purely an economic event as we did with the crash of '08. I'm deeply afraid that these same oligarchs are going to mix in large amounts of war, maybe even a deliberately manufactured plague, as cover for the collapse of our entire system, so that they or their lackey politicians or their lackey central bankers are not fingered for causing the crime.
Our back up the truck moment is here. Just $10,000 into Keith Neumeyer's last two deals could have been turned into $1.8 million for investors. Now he's going all in with a gold acquisition company, a precious metal mineral bank. We consider this a gold portfolio must. Learn more at futuremoneytrends.com/fortune.
Hello, everyone, and welcome into CrushTheStreet.com. I'm joined today with Jeffrey Nielson of Bullion Bulls Canada. He's a returning guest, a truth teller in the alternative media sector, and someone I'm looking forward to speaking to today and diving into the economy here. Jeff, thanks for joining me.
Always a pleasure, Kenneth, and I look forward to another fun chat.
Well, Jeff, one thing I would say is the Fed seems extremely uncertain here, and this is something you've covered. Your opinions on what they're doing and just kind of the instability of their decisions going forward here. But with the talk of raising rates, lowering rates, what do you suppose will happen? Say they surprise the markets and actually do raise interest rates here in September.
Well, I've been really outspoken on this subject for quite a number of years. I've written pieces about the Federal Reserve Chairman, titled respectively, "The Boy Who Cried Exit Strategy" and "The Girl Who Cried Exit Strategy." Because, what we've had is a big, long smokescreen for 8 years. We've had a couple of corrupt administrators who never had any intention of raising interest rates, continually tossing out the trial balloons every few weeks and then puncturing their own balloons a few weeks later. And, what just amazes me is that this game has been able to go on so long. In the fable, "The Boy Who Cried Wolf," the boy only gets to cry wolf so many times before everyone starts to ignore him. And, certainly he'd never get to cry wolf for 8 years and still have anybody take him seriously. Yet the Fed heads, mouth this raising interest rates over and over again. And, the mainstream media, of course, preaches it like the gospel every time because presumably they're all so gullible that they've never even heard of the fable, "The Boy Who Cried Wolf." And so we get this surreal dialogue that has no semblance in reality. Bernanke spent 5 years boasting about the quote-unquote wealth effect that he was creating with all of his money printing. As a matter of elementary arithmetic and elementary logic, you cannot engage in an exit strategy and a wealth effect strategy at the same time. The two policy goals are absolutely mutually exclusive. So when we saw Bernanke boasting about the wealth effect he was creating with his reckless money printing, it was absolute proof that he was never even slightly serious about an exit strategy. That was all just lies and propaganda for the sheep. So, yes, the Fed will eventually raise interest rates. Nothing lasts forever. But if and when they do so in a meaningful manner, it will likely be as a deliberate effort to puncture the bubbles that they've been instrumental in manufacturing, because, of course, the bubble and crash cycles of the banking crime syndicate can't go on forever. Once the bubbles reach a certain magnitude, there's no more money to be made by pumping them up and elevating them even further. They need to deflate the bubbles, fleece the sheep on the way down, and then start a new bubble and crash cycle. That's our system.
Jeff, when it comes to the people in power, we know the rich are getting richer, the poor are getting poorer, and the ultra, 1% of 1% have greatly benefited from the crash of 2008. And you're talking about the fleecing of the people here. My question to you is, are these same people going to benefit the same way they have in the past during the next inevitable collapse that we are likely to have in the system?
And that is the proverbial $64,000 question. And, if you can come up with anybody who can provide a concrete answer to that, let me know, because they must have a crystal ball. The point, of course, here is that this time around, even before we go into the crash end of the bubble and crash cycle, all of our economies are already hopelessly insolvent. So, this is why I get extremely exasperated when I see a lot of supposed experts warning about a so-called quote-unquote deflationary crash approaching, because there's a fundamental flaw in all such analysis. The whole point here is that a deflationary crash, by definition, is a purging of bad debt and malinvestment. And it's the most healthy thing that could ever happen. It's the cleansing process for capitalism. It's the only way that bad debt and malinvestment gets removed from an economy, and so an economy gets healthy again, it can grow. And of course, the obvious example here is Japan. Japan has never been allowed to purge. It's never gotten healthy again. So, we have this dynamic here of perpetuating an unsustainable paradigm. And the point here is that now they've reached a point where when we go down, how do we ever come up again out the other side? You see, to survive a deflationary crash, you have to have savings that you can cannibalize to tide you through that deflation. If you don't have such reserves to cannibalize, then when the deflationary crash hits, the only response is to either borrow or simply conjure more funny money out of thin air. Well, like I just said, our economies are already hopelessly insolvent. They can't borrow anymore. I mean, there's no borrowing that's going on today. All we have are these corrupt governments buying each other's bonds with funny money that they conjure out of thin air. It is the world's largest Ponzi scheme in history. It's the financial model of all of our governments. So how do you have a deflationary crash? How do they even crash the markets and then come out the other side again? So this is what I'm asking myself today, and this is why I'm deeply afraid that we're not going to be witnessing purely an economic event as we did with the crash of '08. I'm deeply afraid that these same oligarchs are going to mix in large amounts of war, maybe even a deliberately manufactured plague, as cover for the collapse of our entire system, so that they or their lackey politicians or their lackey central bankers are not fingered for causing the crime.
Jeff, you are a very timely person to talk to about the gold, silver, the miners. Right now I'm looking at the GDXJ, and it was down 3%. And you are one of the few that have been calling this rally we're seeing a fake rally. So I want to get your thoughts here on what is going on.
Well, I've tried to express the reasoning for this in a multitude of different ways, and I think a multitude of different persuasive ways. And I recently wrote a piece which you might be referring to, kind of summarizing some of the various pieces of evidence here. But I won't get into that. What we're seeing at the moment is that we're seeing this precious metals market that's supposedly rallying basically going sideways now. It'll meander a little bit higher for a week or so and then tails off right away again. But, for me, that's not the most important change. For me, the most important change is when I look at the propaganda. Because when we had 5.5 solid years of precious metals markets being ground steadily lower and lower, the propaganda was very repetitive. And I mean, it gets back to what we were talking about with the Fed heads and their phony talk of raising interest rates. You have the Fed heads talking about raising interest rates and talking and meeting. And every time one of the Fed heads spouts more of their BS, the mainstream media parrots it, and gold and silver markets get slammed lower. Then, of course, the Fed heads meet, nothing is done, and maybe for one day you see a little bump up in precious metals prices. So this is how perverse the markets have been for that 5.5-year period. The liars lie, and the market goes lower every single day. When their actions expose the lie, the markets only go higher for one day. So, think of the absurdity of this. We had 5.5 years of gold and silver prices being ground steadily lower on the back of nothing but Fed talk about raising interest rates, and they never did it. So, why at the end of that 5.5 years weren't we even? Why did the failure to act not completely balance out all the lies? Well, it's because, of course, we have a perversely manipulated system, and the like I say, the lies are treated as gospel. The actions are glossed over. Oh, well, they always had a good reason for not raising it this month and last month and the month before and the month before that and the year before that, et cetera, et cetera, et cetera. Always have a good excuse. And of course, they manufactured a great excuse recently with the Brexit vote. Oh, the sky is falling. Britain's going to leave the EU. We've got to pull in our horns, and certainly we can't raise interest rates from 0.25% all the way to 0.50%.
Yeah. Well, that was convenient.
So, this is what we see all the time. And so, we're seeing this again in precious metals. We're seeing the Fed talk and the market go lower. The Fed talk and the market go lower. The Fed fails to act, the market bumps up for a day and then starts going lower again. So, when I see the propaganda and the price action once again matching the propaganda and the price action we had during this 5.5-year grind, I say, look, nothing ever really changed. They're back to the same BS lines that they were using 6 months ago, fake rally.
Jeff, a popular line that's been going around the alternative media at this moment is the stock market is now too big to fail. Of course, that was what everyone was saying about the banks a few years ago, but the stock market now is too big to fail. And I guess I want to ask you if your thoughts on that, and is the stock market different in terms of its position in the global propaganda and its significance with the world powers than, let's say, the 80s and the 1930s when we saw the Great Depression?
Well, let me first just revisit this whole concept of quote unquote too big to fail again, because it's again one of the most perverse aspects of propaganda. As I just finished explaining a little earlier, bankruptcy is the ultimate purging mechanism for capitalism. Companies are supposed to go bankrupt. It's how we heal our economic ills. So the moment that these big banks came out and proclaimed themselves as quote-unquote too big to fail, i.e. we're sitting on so much bad debt and malinvestment that you have to support us, that was the day that they proclaimed themselves too big to exist and had to be immediately put to death. And that is pure capitalism. There is no possible argument to that. There could never be a concept of quote-unquote too big to fail in a capitalist system. It's totally incompatible with our free market system in every respect. So, of course, there was never such a thing as a too big to fail bank. But then, as you say, they've expanded this nonsense and expanded it into different corporations beyond the banks. And then, of course, we had the LIBOR fraud. We had the criminal banking crime syndicate being caught red-handed, serially manipulating the $5 trillion LIBOR debt market. Well, it's never been cleansed. Why? Because the big banks' crimes are now too big to fail. They can't purge all of the corruption of the LIBOR debt market because the only way to do so is to hold all those contracts null and void. I've got a law degree. I understand the concepts of fraud in commerce. Any contract tainted by fraud is null and void. The day they exposed the LIBOR market fraud, all the LIBOR contracts should have been torn up. We would have had to completely redo these debt markets in order to purge the corruption. That's the law. But of course, we no longer live with the rule of law. So they just wallpaper over the serial fraud in the LIBOR debt market, and they're still rigging it. Wow. Because the crimes are too big to fail. The big banks get caught with their serial money laundering for the drug cartels and the quote-unquote terrorist organizations. They get a tiny little fine that's only a fraction of their profits and go right back to the money laundering again. Their crimes are too big to fail. So, this is what we're getting here with what you're talking about. Is the the debts are too big to fail, the banks are too big to fail, the crimes are too big to fail. It's just extend and pretend with a system of pure criminality, and there's no rationale for it. Like I say, the moment you hear the phrase "too big to fail," what it really means is must be put to death.
Mm-hmm. Well, and just to go into gold a little more and talk about, this fake rally versus, a real bull market. Many people are pointing towards negative interest rates as the reason for why we're seeing people want something tangible. They want real money. And, what are your thoughts then with negative yields and, negative real yields here in the U.S. when you subtract real inflation from the ultra low bond rates and, where people want to actually put their money? What are your thoughts on this?
Well, by coincidence, I'm right in the middle of doing a two-part series specifically on negative interest rates. And the one piece points out what negative interest rates really are. They're a tax on capital. And the other piece that I'm about to write points out an equally obvious fact, which is that negative interest rates are entirely illegal. There's no such concept as a quote-unquote negative interest rate. By definition, an interest rate must be a positive number. It is the price we pay in exchange for the use of capital. You don't get anything for free. There's supposedly no free lunch in the free market economy. If you want the use of capital, you have to pay for it. So the coercive economic fascism of negative, quote-unquote, negative interest rates is just overt criminality. There could never, ever be a hypothetical example devised where a negative interest rate could be legitimate. So this is just naked criminality in every respect. But the other point of it here is these shameless liars in the central banks and the shameless liars in government have the audacity to claim that they're engaging in this open criminality of negative interest rates to quote-unquote stimulate our economies. Well, what could be more absurd? What is a bank doing with a negative interest rate that it applies to its corporate accounts? It's stealing the operating capital of business. How exactly do you stimulate any economy by taxing capital? How do you stimulate an economy by stealing the operating capital from business? So like I say, the negative concept of negative interest rates, it doesn't exist. It's just a euphemism for crime. The supposed policy justification for negative interest rates is total insanity. There's no economic rationale in there whatsoever. It's just charlatan economists who are being paid by corrupt bankers to pump their propaganda out. There's not an ounce of validity anywhere in this interest rate regime of crime.
Well, I would agree with you, and I guess people just wouldn't save their money, and that's the point. They want people out there spending their money and not giving their principal and losing that principal.
Well, of course, in the case of business, though, the point here is that the idea was, we'll hit the corporate world with negative interest rates, and then they'll use all their operating capital to reinvest in the economy. Well, of course, the fallacy there is companies only invest when there are legitimate opportunities available. So, here we have these sick economies that are buried in debt, drowning in malinvestment, and of course, individually, we're personally drowning in debt. Wages have been destroyed. Unemployment is maximized. Sick economies. So where are the positive opportunities for businesses to deploy their operating capital? There aren't any. So this is the whole point here. We have this coercive crime of negative interest rates that's supposedly going to get businesses to spend. Well, no, it doesn't. And the example here is Denmark. I don't know if you're familiar with this. Denmark was the first regime to go fully negative. They have the most negative rates in the world. And you know what happened in Denmark? Companies began to prepay their corporate taxes in ever-increasing amounts. And they did this to hide their money from the banks who were stealing their operating capital via negative interest rates.
Wow.
The phenomenon got so extreme, and this is, like I said, insanity piled atop insanity. It got so extreme that Denmark's government had to pass a law limiting how much the corporations were allowed to prepay in taxes. Wow. Can you imagine one of our bankrupt regimes saying to corporations, you can't send us any more of your money right now?
That's where it just gets to the impossibility of negative interest rates.
Well, and so this is the whole point. You know, negative interest rates didn't cause Denmark's business community to go out and spend. It caused them to hide their operating capital. You know, not spend it, hide it. Well, of course, so they're stealing some of it in taxes. They're hiding the rest. You know, it's a recipe for depression. And of course, it's you know, this is the simple point with any tax. You never stimulate an economy with a tax.
Right.
You know, it's just nonsense.
Jeff, you brought up negative interest rates being a crime and illegal, and it sounds like a crime. It sounds illegal to me, but you know, can you explain to me why exactly it is a crime?
Yes, and the precise legal term that applies here is the concept known as consideration. So, to make any contract legal and legitimate, there has to be a tangible financial benefit for both sides of the contract. So, you know, this is why in the business world, you'll frequently see contracts between two different entities, and you know, where one side agrees to do something or to confer some benefit, and the other side agrees to return to pay the sum of $1.
Right.
And the whole point of this is that $1 is the legal consideration. It's what makes the contract legal. Without even that $1, the law is unequivocal. The contract is null and void. Only one side's getting a benefit. There must be something wrong here. We're going to wipe away this contract. It doesn't exist. So that's, of course, the underlying principle with negative interest rates. You have the you have the lender rather extending their capital, extending a benefit, and you have the borrower providing no consideration in return. So, I mean, like I said, this is one of the most elementary premises of law. Every first-year law student gets taught this as a fundamental premise of all commerce. Every legitimate contract must have consideration. No consideration, null and void, period.
You know, I think it was Bill Holter that in an interview was talking about negative interest rates, and basically in that environment, we are valuing debt more than cash, and that was an eye-opening moment for me. And you've just opened up a whole realm of interesting revelation to this whole Ponzi scheme that is going to make me think for the rest of the day. Jeff, is there anything else that you'd like to share with our audience? Any closing thoughts before we end this interview?
Well, no, you know, I mean, you always, you know, raise a lot of topics which I have strong feelings about, and I express myself fully. So, you know, I get to the end here, and, you know, it's kind of like, well, got to catch my breath. So, you know, there's nothing that occurs to me. If there's anything else you'd like to have clarified, or any final topics you had on your list you'd like to go into, you know, fire away, because, you know, I'm really happy with what we got across here today.
Awesome, Jeff. Well, you know what? That'll be it for today. I actually will look forward to interviewing you and doing a follow-up maybe in another couple months here to discuss what we're seeing, especially with the precious metals and, you know, with what's going on right now with the pullback, and just kind of getting some follow-ups from just some of the biggest names and the best analysts in the community, and I consider you one of those people. So Jeff Nielson, everyone of Bullion Bulls Canada. Jeff, thanks for joining me.
My pleasure, and people can also catch my work. I'm a contributing writer for Sprott Money, and a lot of people will know me through that work as well, and I look forward to coming back here again.